guys. Want to walk you through a common question I get, which is the decision to make an S Corp election when you're a sole proprietorship. So I'm gonna share my screen here. Try to do this fast. I just did a video actually that didn't go live. I thought it was live, but it wasn't even on. So anyway, let me do this faster than the one I did in practice. So let's look at an example where you make $200,000 running your own business as a sole proprietorship, and then in deciding whether you want to go as you want to elect as an S corp. All right. So quick background: when you own an LLC where you're the only member or owner, a single member LLC, the IRS defaults your tax treatment to be a sole proprietorship, right? So you have to elect to be taxed as an S corp. If you don't, you're by default a sole proprietorship. So that's where you would start right here. So let's kind of work through a very as quick as I can example. 200 grand of profit from a business, right? A sole proprietorship. You pay self-employment tax or the payroll tax. I'm going to use those two terms synonymously. You pay Medicare and Social Security tax, which Social Security gets capped at $148,000 of 184.5 of wages. You pay payroll tax on the bottom line, the net income, right? So you have two levels of tax. Something to keep in mind: a payroll tax or self-employment tax, and then income tax. All right, so let's look at how your tax return would shake out. You got your 200 grand profit minus one half of the tax. So the self-employment tax here, you get to deduct half of it on your personal tax return. So adjusted gross income of that. Quick point here: QBI is qualified business income. About 8 years ago, almost 10 years ago, the Trump tax cuts, they put in a 20% deduction for flow-through entities. So a sole proprietorship or an S corp would both be a flow-through entity. So it's effectively, you get a 20% deduction from the net income of the business minus related expenses like one half of the self-employment tax. So you can see that formula there, which is those two times 20%. All right, so that's that standard deduction. We'll just assume a married couple, you don't itemize your deductions. All right, 116.5 is the taxable income. Total income tax, I ran this through tax software just to check it. 15 grand, self-employment tax of 28. You're out of pocket all in $43,000 of tax with the payroll tax or self-employment tax and the income tax. Okay, so let's say you want to be an S corp. Now you've heard the video, you watched the videos say you make 60 grand, you make 80 grand, go to an S corp, save a bunch of money. Key point in S corps is really the crux of everything is that you're trying to get out of the payroll tax with the S corp. That's the argument you're making, is that your income should not all come in the form of self-employment income, that you should say you should get a wage and then you should get a dividend which doesn't have self-employment tax. But the IRS conveniently says, hey, you've got to pay yourself a salary because that's the only way we're going to get payroll tax if you move to an S corp, and it's got to be reasonable. It's got to be reasonable for somebody that would do the job you're doing. So in this example, I'm just going to assume you make 200 and a reasonable salary for your job as the owner is 110. So you pay yourself a $110,000 salary. You do have the employer share of payroll tax that you got to pay, and you can deduct. It's roughly 8%. Your S corp would have at that point would have made 81,000. So let's go fast forward to your tax return. Keep in mind, an S corp is a flow-through entity, which means you pay the taxes on that income on your personal tax return, which is what I'm about to show you. There's your 110 wage. Again, can't forget that you paid yourself a wage and deducted it up here. Your 81.2 flow-through from your S corp. 191 grand of income. Again, now this is an important point. The QBI now, like we talked about here, is now based on a much smaller number because you had to take that salary. Your S corp only made 81 versus your sole proprietorship made, in this example, 185-ish, where you could take the QBI on that. So just worth noting. QBI is 16 versus 37. That's why. Same standard deduction. Taxable income, that's worth noting. Because the QBI is not as high, not nearly as high, your taxable income's up 26 grand. So you pay about 5 grand more of income tax, almost 6. You're in the highest bracket, 22%, same as the sole proprietor. And then the payroll tax you pay. So the total out of pocket you would pay on that 110 grand salary is about 18,000 bucks, both the employee share and the employer share. Now we get to deduct the employer share up here, similar to this. But then the employee share comes out of your paycheck. So it's a cost to you. So kind of the net of things is that you would have paid taxes of 38 grand versus 43. Now, if you stop there, you think, man, I made 200 grand. I'm hearing people say elect S Corp at 60 or 80 grand. You can see how that math just doesn't work. And even on this example, when the savings is 5,000 bucks between these two things here, you still have to file a separate tax return as an S Corp. You don't have that here. You have to do payroll taxes, run payroll, get a payroll software. You could be looking anywhere from 2 to 5 grand of administrative costs that totally wipe out this savings. So, kind of the point being, when you leave this discussion, is that S corp decision is very nuanced. It's not a hard and fast rule. It's not a if you make 50 grand, if you make 60 grand. I'd run the numbers, get a CPA to run the numbers, and really see, because you could be in what I call the scenario where you have a return on hassle, right? You have an S corp and it has it. You have these obligations. You have to. It's more rigid. It's more paperwork, and it hasn't done that much for you. It's a hassle. So make sure you get a return on that hassle. All right, guys. Questions, comments, drop them below. I'd happy to answer a question for you on Mailbag Wednesday, or just on a future video. Chances are the question you have somebody else has. So appreciate you giving me a comment or a question. We'll try to answer those, and we'll see you on the next one. All right, guys. See ya.